Now let's look at the working exercise. It reads, the following is the summary of the petty cash transaction of KOK Ventures for March 1996. And as I'm reading it, I'm going to post. Now this is the format of the petty cash. You have the debit side on the left-hand side, the credit side on the right-hand side. Now, the first column is the receipts, as total cash received. Folio for referencing. We have dates. I will tell you how to put it. That's the date of transaction. The detail for particulars, call it detail of particulars. The voucher number, I will explain. The amount each time. The phrases here, it says, prepare petty cash with analyzed column for expenses as postage. We will pick postage from here. Traveling, we'll pick it from our transaction. Stationery, we'll pick it from here. Beverage, we'll pick it from here. And ledger, we'll also pick it from here. So that's why we have postage, traveling, stationery, beverage, and ledger. So with this, we can post our transaction. Let's take the first one. March 1, we have started now. March 1, received from cashier 3,000 naira as petty cash float. So we go to the date, March 1. This is 1996. Let's put 1996 here. March 1. Now, folio will be CB. CB means cash book. And the amount received is 3,000 naira. March 2, pay postages 189. That's the first petty expense. You go to date column, look at it. March 2, immediately after March 1. Then, in the particulars, you have postages, because that was what was paid, postages. And this will be voucher number 1. And under amount, the total amount for postage, as you can see there, is 180 naira. Then put your naira sign here, naira sign under each petty expense column. Now, postage is 180. You write it 180. It's under postage, and that ends it. You must post it under the appropriate column. The next one is March 3. Traveling. Voucher number 2. Have you seen it on the credit side? Just what I explained. I'm putting it into practice now. The total amount is 120. You now check the appropriate column. So this is where we have traveling. And it must correspond. You don't put it here or put it up. It must correspond where the figure I have in the amount column. You will see the beauty of it by the time we finish posting. Then March 5, petrol for delivery van. March 5, petrol 3, 220 naira. Petrol for delivery van. That will, because it cannot be postage. Traveling, yes. It can't be stationary. There's no correlation between petrol and stationary. It can't be beverage. It can't be ledger. So it will come under traveling. Then March 7, postage 4. The amount is 150. It will come under postage. It's very simple, very interesting topic. Then March 9, stationery 5, 170. It will come under stationery. Look at it, under stationery. Let it correspond. 170. March 10. Envelope, the total amount is 200 naira. Now, envelope, you agree with me, will come under postage. Why? Because you use envelope to post letter. Envelope and stamps and writing pad. All of them will come under postage. So, under here, we put 200. In the past, we used writing pad to write letters then, before the advent of GSM phones. Then March 15, traveling ticket 7, 120 under traveling. March 17, 1 packet of BIC. BIC here is what we call BIC biro. So it's a biro. That's 8. Total amount is 200. It will come under stationery. March 24, we have beverage 9. Total amount is 150. We go to under beverage 150. March 27, diesel. Diesel for car 10. Total amount for diesel for car is 200 naira. You go to traveling because it's under traveling, 200. Then the last transaction there, March 30, Adamu, 11. Adamu is ledger, it's personal ledger. So you write the amount, 500 naira. You now go to under ledger, 500 naira. With this, we are almost halfway through. So what do we do next? Very simple. We draw a line, straight line, straight line. Now, these expenses, we total it to cover it. But the amount column will remain open because you have to balance it. Now, let's start with this. 180 plus 150 is 330. Use your calculator. It will be 330. 330 plus 200 will give us 530. So total postages is 530. 120 plus 220 will give us 340. Plus 120 will give us 460. 460 plus 200 will give us 660. This is 170 plus 200, 370. And this is 150. This is 500. So what it means is that total expenses on postage is 530, traveling 660, traveling 660, stationery 370, beverage 150, ledger 500. Now let's look at the aggregate of this, the amount. 180 plus 120, 300. 300 plus 220, 520. 520 plus 150, 670. 670 plus 170, 840. 840 plus 200, 1040. 1040 plus 120, 1160. 1160 plus 200, 1360. 1360 plus 150, 1510. 1510 plus 200, 1710. 1710 plus 500, 2210. So out of 3000, 2210 was spent. Now, before we go further, to confirm if our figure is correct, let's sum up this because the total here must be equal to the total here because what you have here is what constitutes all the figures here. So let's check. We have 530 plus 660, 09. 1190 plus 370, 1560, 1560 plus 150, 1710 plus 500, 2110. You see, our figure is correct. If what we got here was not equal to what we got here, then that means there's a problem. Our figure is correct. So we have 2210. Now, the last date in March is 31. So you say balance, want to balance this account. Now balance carry down. How do you balance it? We have 3000, which is total cash received. And total cash spent in petty expense is 2210. Subtract 0. Borrow 1 here, 10. Borrow 1 here, 10. 10 minus 1, 9. Since we borrow 1 from 10, this is 9. 9 minus 2, 7. We have borrowed 1 here, this is 2. So we have a balance of 790 naira. After March is April. We have balance. This carry down will not be here. The folio is for this CD. Carry down. This is for voucher. Balance carry down. Then balance brought down. BD. Carry down, brought down. And balance brought down will be 790. So that means that is new balance. I remember I talked about reimbursement. Now, we have to reimburse this petty cashier to bring him back to 3,000 because that's what is expected to have as float. So to bring him back at that level, because I want to do it to that level so that you understand all the terms that I've explained. Okay, this one omitted is forming from cash, so we put it in detail. So now, the reimbursement, April 1, this is balance for. So let's say the same April 1, for example, they now reimbursed cash. In this cash, you talk about the reimbursement. How do we arrive at that reimbursement? The reimbursement must be equal to total petty expenses. And total petty expenses here is 2,210. Look at what will happen. Let's add it here now. 2,210. Because that's total expenses. That's what you're reimbursing. This is the cash he has out of this amount. So when you reimburse him and add, look at what it will give you. 3,000. So he's now back to his former position. You see the beauty of petty cash. So he will spend for maybe April. In April, maybe what you spend may be less than this or more than this. Then you reimburse him with what is spent, whether less than the amount of total expenses or more than this amount of total petty expenses. So with this, we have treated petty cash book. It's very simple. And it started in exam. They just give you question like this. Say it started with this, then these are the expenses. Post it. I believe we have all seen it. Just reach me if you have any challenge. As far as petty cash is concerned, at any level, it shouldn't be a problem. You should see it as a bonus question. Now, to test you, you can write it down as I'm saying it. Write what is petty cash book. Explain the term float. What do you understand by IMPREST system? What is reimbursement? Take your account textbook, any account textbook, the chapter on petty cash book, go to the working exercise, pick any question there, attempt it. I'm sure this session have really impacted on you. Don't share it alone. Share with your friends. Thank you. I look forward to seeing you again. Bye for now.